Hillbillies can be friends with marauders.
We're live? Okay.
Okay.
Welcome, everybody, to the April 17th Administrative Services Committee. First item is the approval of the minutes from the March 13th meeting. We have a motion to approve.
I'll second it.
A second. All in favor, say aye.
Aye.
Opposed? Carried. Privilege of the floor. Is there anyone here that would like to speak to administrative services other than at their designated slot time? Seeing no one, we will close the privilege of the floor. Our first item, local law 423, a local law adopting the volunteer firefighter and volunteer ambulance worker exemption for county real property taxes. And then we're just gonna, without announcing it, move into local law 523, a local law extending volunteer firefighter and volunteer ambulance worker exemption for county real property taxes to certain eligible unremarried spouse.
Patrick Slagle, county attorney.
Terry,
Married or unremarried?
Unremarried is how the statute is written.
not entitled to the exemption either. Terry Nebel, legislator, District 5.
What district was that, sir?
District 5.
Okay, thank you.
Just in case Sue wants to contribute to my campaign.
Is that friends
Based on
friends
this, maybe.
friends of Terry or
I'm going to write that down, Sue.
friends of the unmarried, unremarried?
Whatever. Do you want to go, Patrick, or do you want me to?
Sure, go ahead. I think this has been brought up several times. This is the local law about the firefighter exemption. There will be a public hearing ahead of the legislative meeting next Wednesday. And then both these local laws will be open for your consideration.
Yeah, Bob, this first local law, okay, this adopts the exemption for volunteer firefighters and ambulance service workers. And for this part here, what I've put together is the exemption for 10% on the assessment. Now, the actual law, which was enacted on December 9th, 2022, provided for an exemption of 5 to 10%. Okay, but I've talked to fire chiefs, I talked to the Fire Advisory Board, Emergency Services Council, our own Emergency Services Department, what else? Oh, the Past Chiefs Association. Everybody that I talked to seemed to think that the 10% would be better than the 5%. Okay, so that's what we have in paragraph A. This is what I've proposed based on the people that I've talked to. But look, this is administrative services. We can amend this. We can do anything that you'd like, and it's possible it could be amended in some other committees as well, or even the legislative meeting next Wednesday. But paragraph A does talk about the 10% exemption.
Terry, is it 5 or 10 or is it 5 to 10?
I think it's 5.
I don't know why I'm asking that other than
I think it's 5 to 10.
It's 5 to 10.
5 to
so it could
10.
be 6, it could be 7.5, it could be.
In Bob, quite frankly, some of the other counties around the state have adopted 5%. Now, some have done 10, but it is all over the place.
Okay.
Just based on the people that I've talked to, they've suggested 10%. That's what I'm proposing at this time.
I believe a town just passed for the 10%.
The Village of Mayville.
Excuse me,
Village of Mayville.
Correct. They just did 10%.
I'm all
Right.
in favor of 10%. I was just wondering if it was one or the other or anywhere in between.
No, it's a range.
Okay.
And because this is a local law, any amendment, it would have to lie on the table until, I think, a month, April, till May, unless there's a message of necessity. So you're able to amend it here, or at the meeting next Wednesday. But without that message of necessity, you'll wait until the following month.
Okay.
So, Bob, paragraph A could have been 5 to 10%. We're recommending 10%. As far as paragraph B, there is some restrictions. The one restriction is 2 to 5 years as far as membership in a fire department. We're recommending the least 2 years instead of 5 years. Again, I've talked to some of the fire chiefs and members and stuff. They think that 5 years isn't going to help them that much because they think, well, if somebody is thinking about joining a fire department and they're looking at the exemption, 5 years is quite a ways, but 2 years it isn't. So they're thinking that as far as attracting new members, 2 years would be preferable to the 5 years, and that's why we're recommending the 2 years. Okay. Paragraph C, this has to do with firefighters and ambulance workers that have accrued more than 20 years of service, active service. I don't think there's any leeway there. That's just part of the law, but we are recommending that we make that part of the Chautauqua County's local law.
Mr. Chairman, just a point of clarification here on item C, that accruing more than 20 years of service, Terry, I assume that means retroactively. So if somebody has 18 years in right now, in 2 years, they reach that 20-year milestone. They don't have to wait 20 years from the date the local law is established, correct?
John, that's a good question. I'm not sure because we're enacting the local law now. Okay. But I think there is discussion on a state level to make it retroactive.
Yeah.
Okay. But I don't know that we're there yet.
Okay.
That's a good question.
Yeah, because I
Okay.
feel like if somebody's got
18
19,
years.
20 years in and they're ready to start slowing down in terms of their volunteer
Or
thing,
even
you'd hate
become-
to have them lose that life.
Or even become inactive, they
Right.
should get the exemption because they've served 20 years.
Correct.
And it's something I can look and definitely get the answers.
Thank
See if
you.
the answer
That-
is even out there. Obviously being relatively new, not
Yeah.
much information out there. But a lot of times, too, effective date is different than operative date. So it could be effective once it's passed, but go back retroactively.
John, on that particular question, there is some debate on as to whether or not it's retroactive or not, quite frankly,
Okay.
from what I've read.
Reading this, it seems like that's the intent.
That's what I would hope. Yeah.
I mean,
Uh,
that's just my opinion. The intent is if you've been in there, we're helping you out here.
Bob, I think so,
Yeah.
but
No,
I'm a
it's a good
little,
question.
okay, I'm a little concerned about section 3 where it says effective date in this local law shall take effect upon the filing with the Secretary of State. So does that mean going forward or does it, I mean,
And
that's,
usually there's a lot of case law around that specific section where it becomes effective when it's filed, but the operation of it goes back and can go back
Okay.
in time. There's many case law, and I would agree that that's what I think it applies. I just hate to tell you for sure
Right.
without definitely.
But it makes
looking at
sense
that.
because that's the status of the firefighter when we pass the local law.
Correct.
They have 19, 21, 25 years in. It'd be kind of counterproductive
Disingenuous.
to say,
Yeah.
Right.
In
The
20
purpose of this is
years,
to recruit and
yeah.
retain things. Also, who has 20, like 19 years in, give us another 20 years, you're good.
but by that time you're 80.
Yeah, right. I mean, otherwise, we really don't need C in there. We don't need it for another 20 years.
Oh, yeah.
Sure.
So,
We-
yeah.
Okay, I think that's what the intent is,
So
John.
we're all feeling
And Patrick, you do
I'll
too.
follow up. Yeah, I
Okay,
I
but-
believe it is too.
But don't quote me, just quote him. Okay.
Thank you.
Okay, so that's local law 4-23. Are there, do you have questions on that? We're happy to answer questions.
About retired, like currently retired after 20 years. That's just.
I don't think that would apply. I think it's got to be active, right?
Yeah, it would be, yeah.
Yeah,
So you can be active and then retire after you hit the 20?
that's what we,
That's what we're talking
that's
about?
what we
Yeah,
think,
okay.
Kevin, but again, you're quoting Patrick from now on. not
And
me.
would this be run through the local assessor's office? How would they apply for this?
Yeah, what I gathered from what I've read is the secretary of like the fire department or fire commissioners or whatever will have to file a certified list of active firemen with the assessor's office. So he'll have a certified list to look at, or he or she, the assessor will. And then the actual individual will have to come in and file a form for this exemption.
And once they file it, it's good.
Yeah,
Or
right
is it
now,
annually?
Kevin, it's my understanding they have to file every year because that list will have to be certified every year to the assessor, and then the assessor will take that list and compare that to the forms that are being
Right.
filed by the individual firefighter or ambulance worker.
Okay, good. Thank
Okay.
you. I think it's a great thing.
Oh.
As you people have said, for retention and recruitment.
Okay.
And as we know, New York State puts more and more emphasis and more on these people's backs for training and all of their time. So yeah, this is wonderful. Good job.
Okay. Sue, to your question as to how much it's going to cost. Okay. Look, we didn't have exact number of volunteer firefighters. We don't have that. I think that's something we should have going forward, and I think we should. What I'm going to suggest to emergency services personnel is that they get a letter or a reminder or something out to the secretaries of the fire departments. Probably, I would say probably in January, because this has to be applied for by the tax status day, which in most cases is going to be March 1st. But we do have a list called, it's called the I am responding list. And I took that list, it's like 83 pages long, went through, as near as I can figure, there's about 1,600 active volunteer firemen. I then went through and did a 1% sample on their homes, the assessment for the firemen. And it comes out to be about $85 per volunteer. Now, that's pretty close to what Kim came up with 2 months ago, just by taking 100,000 and taking the county tax rate of $7.80 per thousand. And I think she mentioned 80. That's pretty close, 80 or 85. I'm going to try to do a 1.5% to 2% sample by next Wednesday, but that's the ballpark figure. And so 85 times. Now, not all 1,600 people will be entitled to this, because this is on your residence. And some people rent. Some people have their residences in their spouse's name. So in talking to, again, some of the folks from the fire service, we figure probably the effective number is 1,200. Okay, so 1,200 times 85 is roughly 102,000. And Kitty and Kathleen can translate that for you into what the increase will be per thousand for all the rest of us who are not entitled to the exemption. Okay. And basically, and they can correct me, it amounts to 1 cent to 1.25 cents, or roughly $1 to $1.25, roughly. Okay.
Okay,
As far as the numbers.
yeah, that's
Okay.
helpful, thank you.
Bob, any other questions on 4-23?
What if it's a retired fireman trying to get in touch with a retired assessor? I'm just kidding.
Have
That
him call.
was for Kevin.
Have him call Patrick. Don't call me. Okay, so local law 523 then just builds on what we just did and extends some of these exemptions to unremarried spouses. The unremarried spouse of a volunteer firefighter killed in action, or to the unremarried spouse of a volunteer firefighter who had a lifetime service and it had the exemption at the time of, at the time of his death. That would continue on for his unremarried spouse. Originally, I had both these local laws in one law, but as Patrick pointed out, or Todd, there's a procedural question, and we had to separate these.
Correct. So if the first local law fails, does not pass, the second one would become out of order, would not
Right.
be able to be voted on.
But I thought as long as we're doing the one, we might as well do the other one and get it over and done with. There really is a serious shortage of volunteer firefighters, and if you look at the list of active volunteer firefighters, a lot of them are in their 50s and 60s. They're older. So I think, I've been retired for 20 years. So, but I think this may help with attraction and retention. It's a step in the right direction. I won't say that the situation is critical, Bob, as far as the fire service, but it definitely is serious.
Right. I agree.
In the alternative, if we didn't have these folks, we're looking at millions of dollars in paid firefighters and ambulance workers.
Well, I think it's great for recruitment. I think it's great for retention. And I think it's a great way of honoring, rewarding the individuals who are willing to step up into these positions. In fact, I think it's so great. I'd like to be added as a sponsor to this local law.
Matter of fact, if any of you guys would like to be added as a sponsor, please check with Olivia, and I would appreciate that, quite frankly.
You in?
Sure. Yes, I'm in. And
We're
I
all
am.
in.
Yeah, we're all in.
That was easy.
Thank you for doing all the work.
Yeah.
Yeah, very good.
No, thank you, guys. Anything else, Bob? Or?
Nope.
Okay.
And thanks for coming, Terry. Appreciate it.
No problem.
Patrick, thanks for coming.
Oh, yes.
And Susan, thanks for coming.
What else?
Kevin? Yeah. Okay. That brings us to our first resolution, confirm appointment Chautauqua County Ethics Board. And the name on here is Darlene
Nygren.
Nygren.
Mr. Chairman, I know Darlene, have known her for many years, and she's an excellent candidate, I believe, for this position.
Would you say grade A?
I would say grade A.
All right.
I echo the words of my colleague.
You, what?
Echo the words of my
was
esteemed
a joke.
colleague.
You, what?
Okay.
Okay.
You're on tape.
Okay, all in favor, say aye.
Aye.
Opposed? Carried. Next resolution, quit claim deeds. I believe Kim Moline is here, but if you would state your name for us, we would appreciate that.
But you already did. Kim Moline, Director of Real Property Tax. So tonight we have a couple quick claim deeds. The first one, the QC one, has been reacquired by the property owner. There was a little mess up with the bank, I guess, and they claimed they didn't receive anything, but we have proof that they did. So Todd Thomas he allowed since it didn't sell at auction, for the property owner to reacquire it and pay all the deed fees and stuff as long as you guys approve it. The other one, the PA 9-20 2022. There are 3 separate bids for that one parcel. So you will have to amend the resolution with whichever one you guys decide to choose. And we also have another amendment to make. The total taxes owing was incorrect. It's not 62,000, it's actually $21,194.98.
Very good. That makes it better. What was it? 21,000?
$194.98. Thank you, Olivia, for letting me know that.
So we just added the 3 bids up.
I think so.
Yeah, okay. That makes it more palatable, if that's the word. It's
The
a
3
little
go ahead,
concerning
sorry.
selling 62,000 for 4,000.
Yeah.
So, yeah, good.
The 3 bids for that PA-9-2022, all 3 of them basically want to remodel it and use it for a rental.
Although from the 1,500, if I'm not mistaken, there was more of an emphasis on remodel.
This
Then
one says
just
remodel for rental. Then the other 2 that are 1,000, one just says rental property, and the other one says repair and re-rent.
Typically, when all things are even, we usually take the highest amount, which is kind of a simple.
Formula.
And just to clarify, we use the word bids. These are kind of like RFPs, just for everybody to. So just because they have a higher amount of 1,500 doesn't mean we have to give it to them, because they give a proposal on what they're going to do. So it's not an actual like auction bid.
Correct.
It's more a price with a proposal. So we have the most confidence in the 1,500.
And Mr. Chairman, again, just like the taxes owing amount would have been adjusted, the offer amount would have the same adjustment made then. Rather than 4,000, it would be just if we went with the 1,500, it would be that amount plus the numbers above that, correct?
Very good. Yes.
Oh, yes.
Oh, now it doesn't make it look as good. Do we have a number on that? Anybody do that number yet?
I got it.
Good, John.
$2,046.49.
2,046.49. Okay. Okay. So if we're all in agreement with taking the first offer of 1,500, I will ask someone to amend it by striking out those other 2 properties and using the number $2,046.49 and $21,194.98.
I'll make that amendment.
And I second that motion.
Okay, so Lisa made the motion to amend it by striking out the bottom 2 offers and changing the offer amount and taxes owing to the numbers that we stated. All in favor of the amending the resolution, say aye.
Aye.
Opposed? Carried. Any discussion on the amended resolution? All in favor of the resolution as amended, say aye.
Aye.
Opposed? Carried. Thank you, Kim.
Thank you.
All right. Our next proposed resolution, amend the 2022 budget for year-end reconciliations, health insurance.
Hello, Kitty Crow, Director of Finance. As the title of the resolution indicates, these are reconciliations back from the M Fund to all the county departments. As you may recall, the M Fund is where we pay out all of the costs associated with the health plan. And then those costs are charged back to all county departments. So at the end of each year, we go through, because the M Fund itself is needs to balance out to zero. So anything that we pay out, we essentially charge back to county departments. So based on all the final invoices coming in at the end of the year, we know the final cost for the plan, and then do a reconciliation. So some departments that cause them to go over in their 0.8 benefits account or classifications. And so we offset those increases with sales tax. As opposed, and additionally, some departments were able to, mainly I looked at the enterprise funds where they could offset because sales tax isn't applied to those enterprise funds. So they were able to offset with other reductions. And in the case of one of the funds, they had to use a little bit of their fund balance. There's also transactions related to this reconciliation in the next resolution. And I'll get into more detail on the things that applied to the M fund in the next resolution. But for this resolution, it's mainly charging back those costs to the county departments.
So question, anybody have any questions? So we're gonna use $296,096 from Sales
Sales
tax.
tax, yeah. Of the
And not to-
surplus that we had in sales tax.
and not
yeah.
to bring the other one in, but we can bring the other one in to talk about it. Then we're gonna use $3,112,830. In the
It's
next
not
resolution?
necessarily apples to apples, so it's kind of
Okay.
easier to talk about them separately
Okay,
because these are
so-
just,
After we use this 296,000, how much do we have left then in the surplus
Of-
sales tax?
um,
At least
know,
$4 million.
surplus. How much?
Probably 4 million.
yeah, we had,
4 million.
yeah, this is,
And I know I've asked.
and
this-
and when Kathleen has presented the year-end financials previously, the estimate for this reconciliation was incorporated to a certain extent in those, the projection of surplus for the year-end 2022. It's just that we hadn't gotten to getting the resolution reconciled yet, but she did include an estimate in previous presentations.
So I'm going to ask a question, and hopefully you probably answered this 3 times already.
So, okay.
Maybe I'll remember it this time. So any surplus, is surplus the word for sales tax? What do you want me to call
Well,
it?
surplus is
Excess?
when the revenues exceeded their budgeted amount or expenses came in under budget generates a surplus to
But
budget.
when we project, we're going to take it, I'm just going to use a number. We're going to bring in $10 million worth of sales tax and we bring in 15 million. What do we call that? Extra 5 million.
Surplus.
Surplus. All right.
Yep.
So surplus sales tax that comes in, if we don't use it, where does it go?
The total surplus to the general fund, meaning all accounts in the general fund, over or under budget, the net number of that at the end of the year is applied to fund balance.
Okay. So, so why don't we just take that surplus and put it in fund balance and then just pull the money out of fund balance?
This resolution could be because it's kind of just as easy to use this because the fund balance is our fund balance of it's the balance of all the transactions. The sales tax was a budgeted number in the budget year that it was actually a revenue that had a surplus, so we can use that to offset another expense elsewhere in the budget.
Mhm.
We could have also looked at every county department to see where they underspent and done, little reductions here and there to make up that. But at the end of the day, the adjustment to fund balance would not be changed. It's just we're using
Right.
a current year revenue
Right.
to
No,
offset
I
an
get that.
expense.
I guess my question is, in my time here, it's always been a bigger ask. And not that it's been a bigger ask to take it out of fund balance. Like,
Because
can we take 200,000? And it's like,
you're
well, no.
effectively, yeah, because
this
It-
just
it-
seems,
there's
this
more-
just seems easier to take it out of sales tax
it's,
than out of fund balance. That's my,
I
that's my
think the other
feelings.
element is that we are obligated to we have to amend the budget to make sure that no expenditure classification is over budget. So a lot of the changes that we make, it's because individual departments, their expenses were more than their budget. So we have to make a change there. Whereas it does make sense what you're saying. It's, why don't we just figure out what our bottom line is? And if the whole thing is a surplus, just leave everything untouched and put the surplus in fund balance. We can't do that because we have to change the individual budgets, at least on the expenditure side.
Okay.
Does that
When
make
I'm
sense?
asking these, I'm not accusing or anything.
no, it's just,
I'm not an accountant
we know,
also.
it doesn't, we could do it either way. There's really no reason to do it one way or the other. Both ways would be perfectly acceptable amendments. The sales tax, in years that we have a surplus in sales tax, generally we like to, one way to look at it is it's a current year revenue that has a surplus. The sales tax specifically is not specific to a specific county department. So it's the sales tax in general are what's offsetting all county operations to begin with. And so that would be an appropriate revenue to apply to use that surplus sales tax to fund expenses across all county departments. Whereas another revenue, like say there was a revenue in social services that was a surplus, I wouldn't usually use that to balance out other county departments. But the sales tax is
Sales tax is
generally
for
used
everybody,
to
like a general fund.
yeah,
item. Okay.
yeah. So
I think I've gotten enough that I will hopefully never ask you that question again. Thank you.
I'll be happy to answer anytime.
Or at least act like you're.
And Mr. Chairman, if I could add just one other comment, the reason there is a small use of fund balance is that the surpluses or deficits, if you will, they have to be balanced within each individual fund. And the North Chautauqua Lake Sewer District was already unable to balance its budget within itself. So it was essentially already over budget. So when we did amendments earlier in the year, we were using fund balance, North Chautauqua Lake Sewer District fund balance to make their appropriations budgets what they needed to be. And so we didn't have any place else to go for that particular fund. And you'll see that we're using additional North Chautauqua Lake Sewer District fund balance in the next resolution as well.
Mhm. Yeah, and additionally, like sales tax doesn't get applied to other enterprise funds. So that's why, again, for the sewer district, we would use fund balance because sales tax doesn't apply for the enterprise funds.
Gotcha. Okay. Thank you for that explanation. And like I said, until I ask it again, I won't ask it. I promise you that.
Sure.
Any other questions, comments?
No.
You got anything else that we need to know about this, or are we good? Okay. All in favor, say aye.
I
Opposed? Carried. That was a quick aye.
Because I was listening.
All right, that brings us to our next.
Oh, Mr. Chairman, one
Yes.
note, I was supposed to mention that there was a typo in the resolution that was originally pre-filed in the last resolution.
Okay.
There's one number that didn't make it into the pre-filed document. That is under decrease appropriation accounts. It's line ESS.8120.2, equipment and sanitary sewers. That number should be, it's blank and it should be 8,300 and, I'm looking at Olivia, let me call up my document. 26 or 62, one of the two. Let's see.
It should be.
It should be 8,326.
8,326.
Yes, it should. The total is correct. It's just that that
Okay.
number is
So we can just
missing.
consider that a typo? Yes? Everybody good with that?
I hope so.
Good.
All right. 326. All right. So moving on to the next resolution,
Okay.
amend the 2022 budget for year-end reconciliations, various departments.
Okay, I'm going to talk about these by fund. I think that will be the easiest. So the adjustments under increased use of fund balance for the CS fund, and then the increase appropriations for the CS fund. Those two adjustments are, and then, I'm sorry, under revenue as well. Sorry. Oh, not under revenue. So for the CS fund, we had some final adjustments for costs associated with the flood at the HRC building. And that is offset by, I thought that was, I forgot my thinking here. But, I know what it was. I'm sorry. We did receive, we will receive insurance recoveries for that, but I think they got booked in. I'm trying to remember why I used fund balance. I thought it was, we got insurance
we
recoveries.
received a payment, but we haven't received the full payment at this time.
Yeah, we will, to balance the account, we are using the fund balance, but we're going to get paid back from the insurance company that'll replenish the fund balance.
So
For
that
that
number is a known number and that'll
Yeah,
just go back in.
Mm-hmm.
Okay.
Yeah, so that they just balance out each other.
Okay.
Next, I will address the municipal sales tax adjustments. That's A 1985. So for the final sales tax receipts that we paid out to municipalities, there's an expense and revenue. So for the final payments that we made out to the municipalities, we have to record that as an expense and a revenue. We receive it back from the state, then we pay it out to the municipalities. So those were just the final numbers for those transactions.
When you say final, that means we're done with.
Yeah, we're done with all the sales tax for 2022. Then for the M fund, so because this was the first year that we were self-insured, we have to accrue for liability for runout claims, essentially. So like if we were to have ended our plan in, December, there would still be claims we'd have to pay out for the next couple of months. So an actuary prepares that that number for us. And so we did book that. Once we booked that, along with some other expenses that were in excess of budget and other things that we were able to offset within the expenses that were budgeted, that's how we came up with the amounts that we had to charge back to the county departments that were in the prior resolution. We also received about $775,000 in excess pharmacy rebates that helped to offset the expense increases and then the liability reserve. So that's, in summary, the adjustments there for all the M fund accounts. So Bob, specifically under increased revenue accounts, where it says interdepartmental income paid premium for the county, that $944,000 was what we charged back to all county departments, but we only really needed to make up the 276 in the last resolution because most departments were under budget and were able to absorb that final adjustment. So even though the numbers kind of look big here, the net impact to the general fund was about $300,000.
And that's what stood out to me was the big numbers. I was like,
Yeah.
wow, these are big
And another thing to keep in mind too is that some of those additional insurance costs for, especially in the social services area, we will get some state aid for reimbursement for some of those items. We did not factor that into the resolution just because it's difficult to pinpoint the amount of benefit that we will get. But as Kitty said, the resolution suggests that the overall expense or increase to the A fund is around $300,000, but it actually will be less than that because there will be some additional revenues. Probably won't be booked until a lot of them will be realized in 2023 when the claims are adjusted for that additional expense.
So when we say we're self-insured,
We don't buy an off-the-shelf insurance policy anymore. We're self-funded for our medical plan.
But-
So we pay all the claims. And then at the end of the year, now that we're self-insured, just like our workers' comp plan, we have
Mhm.
to accrue the IBNR, incurred but not reported, as a liability. Because we don't know what those actual expenses are going to be, but an actuary calculates what we should accrue for these types of items.
so I'm going to try to make this like a general question.
Okay.
So if we're self-insured though, will it typically cost us money above and beyond to be self-insured? So,
No, the idea of going with self-insured is so that we pay only what we need to pay and not more than that in terms of premiums. And when we did the analysis, I don't know, over a year and a half ago, Jean was still here, and with our broker, did a lot of analysis to look at, whether we stay fully insured or move to self-insured. The numbers at that time proved out that it was the right time to move to a self-insured
so
plan.
what we pay out, we should take in.
Well, what we pay in claims, we need to allocate out to all county departments because that's how we are. You have the M fund, you get all the expenses here. The revenues that go against the M fund expenses are premiums paid by the employer. The retiree makes some contributions for, if they're making a contribution to their health plan. We get pharmacy rebates that offset the expense. But the net expense of the M fund, whatever revenues that we don't have to cover it, get charged out to county departments based on what every medical plan everybody's enrolled in.
Okay.
And at the end of the year, we have to reconcile all these items, and that's really just all these two resolutions are doing.
And it's
Because
always-
the M fund is not meant to be a fund that has a net profit. It's supposed to just balance out at the end of the year, just like our liability
At zero.
fund. Yeah.
And it does.
By this function, it does. By doing this reconciliation,
Right,
we
okay.
make it balance to zero.
But there really was a 200 and whatever shortage in that.
Yes, because what we had already during the year, because you can't predict everybody's change in level of coverage, but that's what gets charged to the departments every pay period is what any individual county employee is enrolled in. And if at the time of the budget, you just base it on a snapshot of time.
But my question is, and I'm not attacking or, so it's basically self-insured plus. I mean, it's going to cost us a few bucks.
If we were paying a premium to Univera, that incurred but not reported would be built into that premium.
Right. Okay.
Okay.
Which has been historically more costly.
Oh,
Yes.
sure. Yeah. No, I
Well,
understand why we're doing it. It's just,
If that whole analysis, we could take another hour to do that, but there's a
Oh, we have
lot of
time.
factors that go into that decision. But at the point in time, we were facing very significant percent increases in our renewals. Historically, up until then, we actually were doing better by staying fully insured because our renewal rates had been, very reasonable because we had good claims experience. So we started to see higher claims, especially on the pharmacy side when you can't be self-insured. We have been self-insured on the pharmacy for several years, but you can't buy stop loss for pharmacy alone. So by going fully self-insured for medical and pharmacy, we are then able to purchase stop loss that covers both for those catastrophic claims. And the pharmacy, the other thing going on in the pharmacy industry is like with all of the specialty drugs now, there's a much greater liability in the pharmacy side. And that's where we see most of our cost increases, lately are on the pharmacy side.
Well,
So
I just want to say I have full confidence in what you guys are doing. I'm just trying to understand it. a
oh
little
yeah,
more,
no,
that's
it's
all.
not, it's, yeah, there's a lot to it though. Yeah. So I don't mind answering.
Because workers' comp, we basically, it's a wash, right?
Yeah. So what but at the workers' comp, we're fully funded for the
Right.
workers' comp plan. So we pay out the claims. There's a formula on how we allocate the costs back to the municipalities, but
Right.
the goal is so that we also have an incurred but not reported liability that we book at the end of every year for the workers' comp.
Because I don't want to use any more sales tax.
Okay.
Can I ask you a totally unrelated question? Where it says, A 1985 says muni make whole, that sales tax, that's like is that like the 3/17?
That's what's shared back with the municipalities. That's just
the
that.
totality of it?
No, that's
okay.
just the fine, but by the end of the year, that's the amount that exceeded the budget amount that we had initially put in the budget. So we have to pay that out. So because we can't close our
Well,
book.
I mean, but the muni make whole, what does that represent?
It's all of the sales tax
All of it. Okay.
that goes
All
back
right.
to the municipal, but not for the whole year, just for the final payments of the year that exceeded what we had budgeted for those accounts. So we have to do those offsets.
Yeah, and because we did have a significant surplus in sales tax, where obviously the county is bringing in much more than that 8%, we've got to pay out more to the municipalities. So this is a good problem to have, that we have to pay them more because.
Okay.
Okay.
I think there was a couple other adjustments here that I think Kathleen will talk to with the sewer district adjustments.
Yes, the
And
the
sheriff.
adjustments in this resolution, there is a small one in the A fund. Well, there's two in the A fund, but the A 3110 in the sheriff's organization, that is due to a late adjustment in the costs of their cars. We charge, when the sheriff buys cars, he pays for them over 4 years, and we do make final adjustments to that expense at the end of every year based on the actual purchases, values of the cars, useful lives of the cars. So that it's essentially a change in the calculation of the depreciation expense on the vehicles that he purchased, and that was balanced by a surplus in the jail contractual costs. And then there are two adjustments for the sewers. This comes back to what I said earlier, especially with regard to the North Chautauqua Lake Sewer District. Well, I should say both of those adjustments, the ESN and the ESS, are due to late adjustments, again, in depreciation expense for the enterprise funds. So there was additional expense at the end of the year because we look at all of the assets that are purchased and make adjustments for any of the useful life, and sometimes our depreciation budget is not exactly on the money. So there was additional expense in those two funds, and that is balanced by a surplus in the equipment account in the South and Center Sewer Districts, but had to be taken out of fund balance for the North Chautauqua Lake Sewer District. And I should comment too that we are still waiting for, there still may be one or two adjustments to the enterprise funds for the results have not been audited. So it is possible that there may be some additional adjustments, especially in the pension funds for those enterprise operations.
Got it. All right. Do you guys have anything else for us? Any questions, comments, concerns? All in favor, say aye.
Aye.
Opposed? Carried. Thank you. That brings us to other. Does anybody have any other? Hearing, seeing no other? Resolution to adjourn? Or a motion to
I
adjourn?
make a motion to adjourn.
I'll second it.
All in favor?
Hi.
Opposed? Carried. Thank you.
You guys signed it. Evan,
Terry had
Wade,
Yeah.
I was at it.
got into some legal
I
problems.
didn't mean to, you go and get that.
Stop. I
because
was
that's-
up all right, such a hurry to get back to it. Everything about it.
Also, 4:30.
Oh, wow.
Yeah.
In the same class.